Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It's Macro Monday. Let's take a look at the flows report from James at CoinShares with a plus 1.35 billion globally. Most of that coming, of course, from the US, from IBIT, Fidelity, individually on a coin by coin basis. Most of that BTC, as well as some pre-ETH ETF inflows to other ETH products, money coming out of short Bitcoin BITI, and Switzerland being the second by a wide margin on the inflows, or many of those products are offered outside of the US. As far as our rolling cumulative 30-day flows from the Bold report here, again, this is our gold standard 2020 GBTC type continuous inflows. It's a different system, different environment now. We've got the basis trade stuff. We've got people rolling out of spot BTC into the ETFs, but it is a good sign to see the 30-day cumulative pick up once again. And just looking at this loose correlation here, it's pretty obvious when the rolling 30-day cumulative flow is rising, price tends to go up. So this matches what we're seeing. The opposite is true. Price tends to go flat or down when those flows are not there on a 30-day basis. Looking at the Velo data, CME futures open interest is up considerably in dollars. In coin terms, nearing all-time highs. Annualized basis is still at 10%. So there isn't seemingly anyone coming on here and buying the ETFs, selling quarterly futures or something like that. This, to me, appears to be, look at the volume spike here as well, appears to be net long positioning coming into the market. And we've surpassed QQQ, the tech ETF, for flows on a yearly basis with IBIT alone, which is quite remarkable. Not everything is as it seems, because again, remember, this isn't just money that was never in crypto coming into crypto. This is a mix of a lot of different people, including people who are selling on one side and buying on the other. I did it myself. I know exactly the type of person that would do something like this. I am one of them, where there are plenty of reasons to have TradFi legacy exposure to BTC. So is it purely one-to-one? No, but it's still an attention grabber. It gets headlines and it gets people wondering who are not involved. Why is this thing getting this much flows? Why is one product getting as much flows as it's getting? People will start to ask questions. They will become Bitcoin curious, if you will, and that should help bring more money into the ecosystem that hadn't been in the ecosystem previously. We still have GOX coins being sent out to individuals, which I'm happy about. Glad to finally see that. The total BTC amount is around 142,000. Not all of that's going to get distributed at once. It's going to be segmented. It's going to be over multiple days, multiple weeks, multiple exchanges. As Arkham says here, there's 5 exchanges involved, including Kraken, BitGo. Bitmart, I think, is one of the 5. I don't know who the 5th is, but it's starting to get distributed. So we're going to have to chew through that. Based on where price is sitting, we probably see some sideways action or some down action, but I don't think it's that big of a deal. We also have US government coming in, selling $4 million worth of BTC, which is essentially nothing, but good for them. Let's get it all out. Let's get the miners selling. Here's a graph on that. GOX, the governments, just get it all out there. We'll get rid of it. People will buy it. IBIT will buy it. Somebody will buy it, and we'll be above 72 eventually here. And then we're going to unlock more supply when we go to 90 and 100 and 150, and that's just inevitable. But there's a lot of money, there's a lot of debt out there to absorb with the buying eventually over time. Just looking at price today on the crypto settings, BTC index side of things still look very good here. We're still waiting on the bullish TK cross, still waiting on the bullish cloud here, but we look good. We could go back down to 64, sorry. We could just go sideways. This is a much healthier, in a bullish fashion looking range than it was down here, where we were ready to go deep cliff diving. Even CME futures using the legacy cloud, there and back again, as far as being back above the cloud settings, look as though they are ready to flip here on TK Cross and the cloud. So it looks very good. It looks very good. Added to a bunch of positions today myself. This is BitX on the 4-hour. Even if you don't trade this stuff, it's still interesting to, I think, to monitor, to watch, and to just see what the signals look like. And it looks to me as though BitX is trying to exit this downward channel on a low time frame using a legacy cloud setting. So we're definitely headed in the right direction, despite the upswell in support for Harris as the Democratic nominee. That hasn't seemed to matter too much for BTC, at least not today. I think the Gox coin announcement was more impactful than coalescing support around a Harris presidency. Before I go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience for the one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PVI, DBA, Kraken. Alts, again, they look okay. They really need BTC to continue. They really need to see BTC strength. We're going to see on a daily basis individual gainers probably all over the place. Are these going to outperform BTC miners? I don't know. Are they going to outperform BTC adjacent stuff eventually? I don't know if the time is now for that. This is TIA, one that we were talking about Thursday on stream. Another inverted head and shoulders case down there. So some of these look okay. Some of them look tradable. VPVR also looks pretty good. But all in all, most of these just are okay. Sol probably the strongest amongst them, looking very bullish here above the daily cloud. Again, we're waiting for those signals to flip fully bullish, but you've got all sorts of bullish stuff. You've got it previously, you had an inverted head and shoulders, W double bottom, you have another W here. So even if this pulls back, it still should be fine in the near to midterm. Looking at the calendar for the week, nothing for today, and really none of this stuff really matters to me. GDP, okay, that's important, I'll give you that, but PCE is definitely the most important thing. We may see Fed probabilities for meetings past July, past the end of this month, which is next week, I believe, right? On the next week, Wednesday, already. But we may see odds for September shift further with a PCE that's below expectations. We may see odds for a 50 cut potentially, which sounds insane, but if Powell comes out in next week's meeting or the meeting in Jackson Hole in August and says something to the effect of we are feeling as though we are behind and need to catch up or something, that could shift these odds considerably. But the idea of hikes in the near term are off the table, most definitely, based on the numbers we're seeing, because inflation is, based on Trueflation, at the bottom of the range. It's at a one-year low at 1.79, and really since March, it's consistently moved lower. Since September last year, it's done a pretty good job at moving lower. So we're headed in the right direction based on the real-time estimates. And there's other data out of the UK that is consistently marching towards deflation. So we should expect easing cycles there as well. Looking at the core PCE and PCE expectations for this month, it's going to be flat, unchanged. Next month, this month's print, which we receive next month, will be probably slightly up. So it depends how they want to thread that needle. Do they want to say, does Powell want to say, my job isn't done, we're going higher for longer? Markets aren't going to like that. Markets are under the assumption that we will see a cut in September, and likely a cut the day after the election. Markets haven't seemed to mind too much on the exact month of a cut, just that one is getting priced in. But this month's PCE should be a non-event. Looking at GDP estimates are back up above 2%, slightly almost 2.75%. So we should be holding pretty steady on the GDP print upcoming here this week. Looking at the yield curve, the front to mid part of the curve has started to slope downwards. The belly also downwards. The stubborn back end is still up here quite a bit. What's going to be really interesting is what happens when we get that cut. What does the yield curve start to look like? Does the yield curve start to uninvert or not? How does the shape of the yield curve change? We've essentially had roughly the same shape of the yield curve for the entirety of this year. So we may start to see some more violent changes in the front end, in the belly, in the back end. Do we get a bear steepener? Do we get a bull steepener? Does anything happen at all? So I think it's important to think about that and position around that if you are trading anywhere in the curve at all. Looking at the 10-2 inversion, it's just as inverted as it was a few months ago. Not much has changed. If you zoom in on this here, it looks like an inverted head and shoulders, so it'll be interesting if it plays out as such. But all of this is starting to line up with some sort of potential recessionary type of environment going into 2025. If unemployment continues to tick up, if the yield curve uninverts, and if rates come down, which looks like they will, that is a recipe for a recession. That doesn't mean markets go down. It doesn't mean markets crash, but certainly something to think about and consider into 2025 here. Looking at liquidity, reverse repo has held flat. I forget if it was Bianco or Joseph Wang who had said months and months ago that eventually we're going to hit this asymptotic plateau here where we're just going to have a baseline sitting in reverse repo. So we haven't seen any more liquidity injection from the reverse repo really since March. So the question I have is, okay, where is this coming from? Where is this liquidity coming from? USM2, this is Yardeni. I'll put all these links to the data in the description of this video. M2 has flipped positive. I think most of the world sees that and has seen that over the past couple weeks. I saw a lot of graphs on that. It's no surprise that BTC, crypto, alts all collapsed when we're losing USM2. Very important for us that liquidity continues to rise, and we're not, most of us anyway, aren't here because we assume liquidity is going up. It's just, it has nowhere else to go but up. Putting the past couple of years together, this is an older chart, but I thought I'd bring it up again. Looking at liquidity and RRP, we had the RRP increase into 2022. It plateaued, and then we had the RRP get drained from 2023 into 2024. And so what's going to be the next thing? Are rates going to be enough coming down to move us higher? BTFP, by the way, has come down quite a bit in this purple line. So something has to help push liquidity higher. If we look at total assets of the Fed, ECB, Japan, and China, outside of China, assets on central bank balance sheets have been declining for quite some time. China recently had a surprise cut, and as you can see here, the Chinese total assets continue to rise here. So it's one place where we're already seeing rises in liquidity. But going forward here, it's going to be very interesting if the Fed, the ECB, and Japan turn this bus around. We stop QT, we start some form of QE, ECB, same thing. So that's something to watch for. Here's another look at the seasonal Chinese PBOC liquidity spikes going back since 2019. And based on this, we are in the wheelhouse of something to watch for. I think the interest payments on debt are where a lot of the liquidity is coming from. There's a lot of money in money markets still. What does this look like when rates come down? Does this move at all? People are generally pretty lazy at moving money out of money markets unless it's managed money. But this is one spot additionally where we could see liquidity into risk assets. If rates eventually come down to, 3.75, money markets become less attractive. Generally over time here, since 1990, since 1980, this has been one direction, right? It's only been up. If anything, it's starting to get parabolic, and that's because rates are as high as they are and debt payments are as high as they are. So if the long end and the short end collectively become less attractive, we may see a lot of this money get shoved into risk somewhere. Mag 7, tech, software, Bitcoin, ETH, ETF. Certainly possible. Certainly possible. We've also got, on the US side, $9.3 trillion of US debt that we will need to roll within the next year. Because remember, Yellen decided to issue more on the front end than the long end to pull money out of reverse repos, and we are eventually going to pay a price for that. So rates in some regard have to come down because we're just going to be paying an infinite amount of money for our debt forever, unless there's some action taken somewhere, because clearly spending is on a one-way ride to infinity here pretty quickly. So with all that in mind, the dollar, I'm not too bullish on it long term, personally. I don't think many people are. They just understand that the US dollar is the strongest currency currently, and that as awful as the US dollar is, it's the best option for most countries and most people. Looking at the technicals on DXY, we are below the cloud here on the daily. This is hopefully some sort of failed scoop-de-whoop bottom, rounded bottom, compound fulcrum. There's all sorts of potentials here, but hopefully this does not recover back to 105. This is also a Trump trade. Trump, Vance, and the Trump administration have already come out and said they want to weaken the dollar. Whether or not they achieve that, we will see. But my guess is the dollar will decline and things will start to get priced in if Trump does get elected in November. I think the more interesting thing to think about is what happens if Harris gets elected. Does DXY magically shoot up to 105 plus, or does it just remain stagnant in the range there? We also have the case for a head and shoulders here potentially on DXY. Pretty aggressive neckline there, but as expected, we are seeing some bullish relief with DXY coming down. So we finally have a couple tailwinds starting to pick up for BTC price. We also have UJ, which was a huge problem, starting to sort of roll over on its own. It's not creeping slowly to infinity. UJ past 162 is a threat to the US bond market because they will have to shore up this pair. BOJ will, by selling US debt, and that's not what we want. So technicals on this look ready to roll over to me along with DXY, which is a good thing. TLT still looks very, very bullish to me. It looks like it's ready to potentially break out. Based on everything I just said, this makes no sense. We're going to be issuing more on the long end. No one cares about the debt, and there's less buyers of the debt. But the technicals are on the other side of that equation, and they say, I hear you, I see you, I don't care. If this breaks 94 into 95 to 97, that would be a nascent, fresh bullish trend, the first since 2020. And it's going to be, again, interesting to see what happens to TLT when we get that first rate cut, potentially in September or November. What happens to TLT if we get a recession? For the major indices, S&P and the Qs, we're at the point here where we are within the wheelhouse of targets on the multi-month cup and handle that we had into 2024. So I really don't see a great reason to jump into the S&P here based on technicals. I think there's plenty of opportunity in individual names. Same thing with the Qs. Plenty of opportunity in individual names. There's a bear div there at the top along with everything else. And it just looks a little tired. And I think it's going to need some time to recover, some clarity, potentially just go sideways into the election to figure out what the heck's going on. We've had some crazy headlines over the past couple of days. This is DJI, and it as well has reached its multi-month cup and handle target. So my guess is most of these collectively just go sideways flat into the election, or at least in the near term, and don't do much of anything. Looking at sector ETFs, SMH also had a bear div at the top there. It doesn't really look compelling as a buy to me here. You're always looking for a pattern or cloud evidence to back you up, at least I am, on entering a trade. And you don't really see that here other than the Kijun bounce at the very top. Into Q4, I think it'll be very, very clear exactly what we're going to see on all of these. Will we see all of these roll over, go sideways, reset, which would be a great thing? Or are we going to see angry markets? I think those are the two options. I don't really see us magically floating higher unless we have liquidity back into the ecosystem in a bigger way. One sector ETF that I do like here is IGV because unlike S&P, Qs, SMH, DJI, this is potentially just starting to break out of its multi-month, multi-year cup and handle. And if the previous indices weren't enough evidence of patterns like this is gold. This is a decade plus long cup and handle. Gold moves at the speed of gold. This is a 30% plus move eventually, but this may take another 5-10 years to reach its target. But it still has upside in it. I think near term, it's a little overbought. It's having trouble, it's struggling making new highs. But clearly this pattern, to me, has started to play out. And that's why when we talk about cup and handles on BTC, you can visually see it there. On ETH, a little less obvious maybe, but it's not there. Something like Sol looks pretty clear. These move at the speed of crypto, right? So if I'm trading anything in my lifetime, I would much rather play these breakouts in crypto than fool around with, gee, SMH, man, I don't know. It looks kind of ho-hum, or DJI or Qs or any of this other stuff. It just takes a very long time. Even this TLT chart, as bullish as I am, there it is. This could take another 6 months, 3 months to play out. Whereas BTC crypto is likely going to move before that in the next 3 months. So there's always an opportunity cost. Yes, there's more risk. Yes, there's more volatility. But I do think that's why here, especially, crypto looks very compelling on a relative basis. XLE is another one where it broke out, it looked real, pulled back. It's had falling wedges. It's a giant mess. The 3-day looks okay. This is probably also a Trump trade because of the energy implications. I still like this as a reinflation hedge. The pattern still looks real. It's still above the high time frame cloud here. So even though this chart has really gone nowhere, I don't hate it as an inclusion in the portfolio relative to SMH and tech, just because it still has a pending breakout potentially. It just may take a minute to get there. IBB is another biotech ETF sector that broke out quite nicely on an inverted head and shoulders here. Still looks like it has a little bit of room. It looks okay. It's kind of IWM-ish. But all the Mag 7 collectively, I didn't really see anything worth even mentioning today. I'll talk about Tesla in a second. But even KRE is doing quite well. This is a regional banking ETF. Maybe has a little bit of upside left. Certainly looks much better than it had previously. And again, the next thing to watch is how does this react to rate cuts? And what do you think this will do relative to cuts if we get cuts? Will we blast past 65, or are we going to find some reconsolidation in the 60s? This is Tesla. I don't think there's much immediate upside here. I liked the pattern. I liked the cloud breakout. It shot way past the measured move range, which is great. You always love to see that if you're in the trade. But from here, it probably needs some additional consolidation. Also, I'm sure some sort of Trump trade implications because of that relationship. But I don't really see a setup per se here. It doesn't look like it's going to roll over immediately, but I can't say this looks bullish to me, really. I think we need to see some extended consolidation, maybe a triangle or something up here. But the rest of this MSTR, as much as I honestly loathe the idea of MSTR, I cannot deny technically it looks phenomenal still. One of the best looking setups across the board. Makes no logical sense why this is trading 2x BTC plus, why this may break out to a new all-time high, may see 4,000 by the end of the year. It makes no sense to me, but I'm not here to try to make sense of things. I'm here looking at technicals, and technicals for MSTR look very, very bullish, very bullish. Bitfarms is another one of the miners that is in pre-breakout. I mentioned CleanSpark and Cypher a couple weeks ago. Those are two of the strongest looking charts to me, but Bitfarms would be on the list for pre-breakout pattern. Looks pretty good on the daily potential inverted head and shoulders. WGMI looks good. And I talked about Coinbase last night, but this is CONL, which is a 2x long coin ETF that people in the Discord reminded me existed. And this is another chart. You cannot deny that this looks very bullish on the cloud. It's got some sort of W whatever here. Clearly has some sort of bullish channel that it's within. So looking at legacy and looking at crypto legacy, it's just there's no contest. The trades for me here are all in BTC, BTC analogs, leveraged BTC analogs. I don't have a chart for it, but GDLC also looks phenomenal. That's a basket. BITW looks phenomenal. That's a basket. And here's BITW, ascending triangle all day, back above, holding above the daily cloud. Unlike XLE, this will probably break out over the next couple months. And this has a discount. This has a 25 to 30% discount. Still, Whether or not the discount will close is also potentially a Trump trade, because if Trump comes in, Gensler's almost certainly out. SEC is probably more lax on what they are allowing in a basket of stuff. Bitwise 10, GDLC are both baskets that are mainly BTC, ETH, and SOL. So there's lots of stuff outside of NVIDIA, outside of Amazon, that I think right now looks very compelling as a technical setup if you're not just trading BTC directly. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.